Shel Pellegrin has got business news. He managed to stick with us through that, didn't you, Shel? He's going to start in the tech world. A look at the company behind artificial intelligence chatbot, ChatGPT.
That's right, Stuart. That company is OpenAI, and it's now one of the world's most valuable startups. This after concluding a fresh round of fundraising, which brought in $6.6 billion from a number of big investors, including venture capital firm Thrive Capital, Japan's SoftBank, and Microsoft, to name a few. This was one of the largest ever funding rounds for a private company. This means the AI darling is now valued at $157 billion, on par with established publicly listed companies like Goldman Sachs and Uber. That's almost twice as much as it was worth at the beginning of the year. There are conditions to this new round of financing, though. OpenAI has demanded that investors not be allowed to put money into any of its private competitors, like Elon Musk's xAI, for instance. And investors will be able to withdraw their money if the company isn't fully converted to a for-profit company within 2 years.
So what's the company's status right now, Shel?
It is currently a charitable non-profit with a separate for-profit division, but under the stewardship of its CEO, Sam Altman, and under pressure from investors looking to earn profits from the technology, the group is undertaking a conversion. This has led to internal turmoil centered on questions over the responsible way to develop artificial intelligence, and has led to the departure of leading executives. The success of ChatGPT has a lot to do with this change. The chatbot has 250 million active weekly users, 11 million paying subscribers, and 1 million business customers who are paying to use the technology. But the company is still far from being actually profitable. It's expected to lose $5 billion this year. AI models are extremely expensive to develop and to operate, notably because of their energy needs. And recruiting leading AI talent means yearly salaries in that field tend to be in the millions.
Going to stay in the US for this next story. A look at the dockworker strike that's really paralysed ports on the eastern and Gulf coasts.
At the end of a second day of striking, the situation appears to be at a standstill between the union, representing 45,000 dock workers, and U.S. port employers, leading to fears of prolonged supply chain disruption ahead of the holiday and the U.S. election season. Absolutely. This strike is blocking all kinds of goods, from food to automobiles, and could cost the U.S. economy billions of dollars every day. President Joe Biden has put pressure on employers to raise their salary offer to be closer to what unions are demanding, meaning a 77% annual wage increase over the next 6 years. Take a listen.
There's a consortium of basically 6 owners that control all the ports from all the way to the East Coast down around the Gulf. And they've made incredible profits, over 800% profit since the pandemic. And the owners are making tens of millions of dollars in this. The last thing they need is to profit off of this. It's time for them to sit at the table and get this strike done.
Now, next, Argentinian university students and staff are up in budget over new budget cuts there.
That's right. President Javier Milei has followed through on his threat to veto new funding increases for the country's public higher education system. The move comes despite mass protests Wednesday as students and staff sought to ensure their funding would keep pace with the country's massive annual inflation rate, currently close to 240%. Brian Quinn has the story.
On the streets of Buenos Aires Wednesday, an outpouring of opposition to austerity as students, teachers, and staff of Argentina's public universities demonstrated against what amounts to severe cuts to the country's higher education system.
It's unsustainable. Without minimum wages, there are no teachers, no infrastructure. Without resources, without research, we cannot move forward with anything.
Weeks ago, Congress passed a law to guarantee increased funding and teacher salaries to keep up with Argentina's inflation, which hit an annual level of nearly 240% in August. Teachers and staff have reportedly lost some 40% of their purchasing power since December. On Thursday, defying the massive rallies, President Javier Milei vetoed the bill, calling lawmakers who approved it fiscal degenerates. Milei has made a top priority of cutting Argentina's budget deficit, which he blames for persistent high inflation. And while monthly inflation has eased recently, the country's poverty rate has shot up over Milei's term, hitting a two-decade high of nearly 53% last month. Widely cherished by the public, Argentina's universities are internationally prestigious and mostly free of charge. Milei, a far-right libertarian, says they're a bastion of socialist indoctrination, but supporters say they're a crucial pillar of a healthy market economy.
We claim to want investments from foreign companies, but those companies will never come if they don't have educated workers to hire.
Milei's party represents a small minority in Congress. Protesters are hoping his veto can be overridden with a two-thirds majority.
And Charles, ending with a look at the markets.
The major European bourses opening mostly lower this Thursday as investors assess developments in the Middle East and the conflict between Israel and Iran with potential impacts on oil prices and the world economy. The oil and gas sector is the reason the FTSE 100 is actually trading higher at the open, with major companies like BP and Shell listed there. Unemployment data for the Eurozone also came in at 6.4% in August, at record low, which will inform the thinking of the European Central Bank when it comes to interest rates.
Charles, thanks very much. Charles Pellegrin on France 24, our business editor.